Hi everyone, today let's talk about Intel earnings. Then we'll take a look at the charts for the whole semi space. Then we'll take a look at the options chains and see if there's any good opportunities. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Intel did beat on the top and bottom line, but their guidance for the full year was not great. They pulled back a lot on that news, down about 11%. You can see earnings, they did beat 54 versus 45 cents. Revenue 15.4 compared with 15.15. So everything looks good at the surface, but then it starts to get into forward guidance. You see 13 cents per share for the first quarter, which is definitely rough. That's a massive step down. Street expectation was 33 cents, so about a third of what we expected in terms of earnings. And then even their revenue guidance, 12.2 to 13.2 versus the 14.15 expected. So forward guide absolutely weaker than expected, and that's really why the market is tanking. And there's been a lot of questions about Intel. Can they keep up with AMD, Taiwan Semiconductor, as well as NVIDIA? Can they start to compete in the GPU space? And they are definitely starting to lose market share over to people like AMD in the data center market, which is definitely not good. And I think part of the problem too is that Intel shares are up 74% over the past year. So it's been a massive run, and they were just not able to keep up with these massive expectations. Semiconductors have been going crazy, and Intel is the laggard, but it's been trying to keep up, and it has been in terms of price, but in terms of earnings and forward guide, that narrative is starting to crumble here in 2024. They did mention that their foundry service is starting to make a little bit of money, a 63% annual increase up to $291 million. Not a huge amount of revenue for a company that makes about $13 to $14 billion every single quarter, but eventually this is going to be a bigger part of the company. And I do think that Intel over the next 5 years is probably going to be an opportunity, but in the short term, they definitely have some issues. You can see their self-driving subsidiary, which isn't an independent company, but they do own part of it, had to cut a $3 billion loss here, which is a pretty substantial loss for the company, even if Intel is just a part owner of that company. And like I said, you can see they are starting to lose some market share. They saw declines in sales. But the question is, will they ever be able to compete with the GPU space the way that AMD and NVIDIA are right now? Moving over to the earnings calendar just for a moment, I do want to highlight that AMD earnings come out on January 30th. And if this is any kind of forecast, AMD is going to be headed much, much lower. AMD has had the most massive run of the group, and it is a very expensive company, even compared to its peers, and it does need to generate a lot of growth and very strong forward guidance to maintain that current price, in my opinion. So just keep that in mind in the semiconductor space. Moving over to the charts, looking at Intel here on the weekly chart, you can see our most recent top was April of 21, up around that 68.20 level. We also touched that same level here in February of 20. We had been in kind of a consolidation, and then once this level broke here, at $44, it went all the way down to around 25, and then since then, 25 held, rallied all the way back up to this 49.87 level. You can see that was an important level here. We marked it back in January of 18, touched it here in December of 18, kind of chopped through it several times, held this level in November of 21, and then we broke through, retested here, and then that kind of triggered that bigger down move. So important levels here. It was already at resistance, which is not great. And you can see momentum was fading on that. RSI had already broken down a little bit. Let's look at it on the hourly chart. You can see that massive after hours move, touched the level, broke all the way down to the next one, wicked it, gapped through it, and we're back through it here pre-market this morning. It'll be interesting to see if this can show any kind of rebound. Like I said, Intel has been showing a lot of weakness, and most of the information to me is not new information. It did seem like these are the same struggles that Intel has been struggling with. They've been losing market share. They've been falling behind compared with their peers. And the question is this company just 10% cheaper now with really the same forward guidance. I would argue their earnings are definitely going to struggle. Like we talked about, first quarter is going to be pretty rough for them, which is not a great indicator, but I would say that their longer term thesis is still intact. The question is, was the company expensive even based on that longer term thesis? Certainly possible, but it is 10% cheaper now. So you were at $50, broke down to that 44 level. We'll see if that level holds, and then if it does not, you do have kind of a midpoint here at $42 at this previous dip low, but realistically I would be looking for $38.40 if you get back into this zone down here. I do think Intel is a decent opportunity in that area. Moving over to AMD, this has been an absolute rocket ship. You can see we were down here at $55 as recently as October of 22, and since then we've rocketed all the way up to $180, over a 200% gain in just about a year and some change. You can see we did have a little bit of a pullback here from about 128 down to $95, and then we doubled again on that next rally. So massive run here on AMD. The question is, like I said, is this an expensive company? The other thing I did not mention with Intel is that they do pay dividends, whereas its competitors currently do not pay dividends. So that's another opportunity with them if you're interested in that kind of an investment. But this is all-time highs here for AMD. You can see we're well above this previous high. Massive breakout, and they do have very, very high expectations for their current quarter, in my opinion. And the question is, can they deliver on that quarter as well as put out strong forward guidance that's going to continue to entice investors to pay this very expensive price? You can see even here, just from January 4th, we were down at 134, and it's had a massive run all the way up to 184. So almost $50 of move during that period, which is about a 36% gain in just this month. So massive, massive moves, and I can't imagine that they can deliver on the current expectations and forward guide to maintain these prices. And if they do start to pull back, that's going to be pretty weak for the semiconductor space. We've been watching semis for a while. It's been on a run. Massive, massive move to the upsides at all-time highs in terms of the semiconductor ETFs, but have they outrun their course? And you can see here, it was basically flat on the day yesterday, and then after hours, it did show weakness with that Intel move of about 3.33%. It is bouncing from that 21 EMA here on the 4-hour chart pre-market today, but momentum still bearish. And if this starts to break down here into its earnings, I think that means that people are going to start seeing through this massive valuation and that it can't maintain its current levels. Moving over to NVIDIA, this is another stock that's obviously had a massive run. Last year was a massive run for it. And even recently here, we were down at 400. We've gone since then up to 600. So with that move, it gives you about 50% move from the lows of this consolidation to current levels. So NVIDIA obviously been on a run. But the difference with NVIDIA is that every time they put out earnings, their forward guide and their deliveries are usually better than expected, and then it goes even higher, which is bananas to me. Still an expensive company, but they seem to continue to deliver on their earnings expectations. They at least give reasonable ones, and usually it goes higher on earnings. So I don't have the same trepidation here with NVIDIA. I do think it is an expensive company, for sure, but they continue to deliver, and you can see even with their pretty good reputation and strong growth, they did move about 1.75% down on that expectation, hit the 21 EMA, bouncing a little bit, similar to AMD. So the structure is still similar, but I just think NVIDIA is probably the better opportunity. It's also not as expensive relative to AMD in terms of current earnings. I think AMD has a lot of earnings to grow into, whereas NVIDIA continues to actually grow into those earnings. They also are basically the only game in town when it comes to GPUs, at least the highest end GPUs in my opinion. They really do the best. And then when it comes to AI and requirements for computing, they are the best in town as well. So best in brand, continue to deliver. NVIDIA does seem like the best between those two. So looking at opportunities here, starting with Intel. Intel does have weekly options. Let's take a look and see if there is any volume. Not really. So Intel, not a great options company. You can occasionally get some options in here. They do have options every single week. So it means that some people are looking for it. It's just not showing any volume here today. I would guess that the volume's somewhere between 50 and 300 on these at the money strikes. But in terms of price action, let's look at it on the charts. This is the daily TastyWorks charts. You can see the 144 EMA sitting down at 40.20, again, right in that 38 to 40 area. That seems like where you're going to get the best opportunity. Obviously, volatility is expanding here. You're not quite to that lowest ATR band on the daily chart. Let's look at it on the weekly. You can see even with that move on the weekly, that puts you just into the middle of the range. Your support on the weekly is down in around 38 to 40 range also, so does seem like that's where you're going to go. 38 to 40 seems like the most reasonable area, which would give you about another 10% down from current prices. So I'd be careful on this one if you're trying to get into Intel. It does seem like it has about another 10% lower to go from $44. Moving over to AMD, you can see we were right at the top of the range on the weekly chart. So definitely overbought through wicks well above that highest ATR band. That usually doesn't hold, especially on the weekly chart. That tends to pull back. Sure enough, we are pulling back here. Let's look at it on the daily chart. You can see we were at that ATR band. We pulled back yesterday, continue to pull back here. 9 EMA sitting at 170.80, so about another $5 lower. Middle of the range is down at 162. So I would be a little bit careful here as well. I did mention that AMD seems expensive. In terms of options, 162 would be right at the bottom of your weekly range. You could still get that for about $1.80, which is pretty good. That's about a 1% return at a pretty significant move lower from current prices. And you can see the implied volatility here is massive. It's currently at a 99 and only goes to 100. So volatility on AMD very high. Keep that in mind. But you can get a pretty decent out of the money put here and get a pretty decent return on that. Understand after hours on the 30th is their earnings, which is part of the reason you can get such a good return on pretty deep out of the money puts. But overall, I would probably take this over the Intel move. Intel probably has about 10% down move, whereas AMD is probably going to do a little bit better than that, in my opinion. And then lastly, NVIDIA, you do have earnings for them on 28 February, so keep that in mind. Looking at the charts on NVIDIA, you can see very similar to AMD, we've been grinding on that upper ATR band, pulled back from it a little bit, back towards that 9 EMA at 594. Middle of the range is still sitting around 570, so that gives you quite a bit of downside if we end up pulling back a little bit. Look at the weekly chart. We were right in that same range. It does look very, very similar to AMD. These seem to be moving together. Weekly support is down at 479. So that's, again, a very long way down. The risk is definitely to the downside. The question is, can it continue on this run? Certainly seems like it could, but keep in mind that Intel could be an omen for some weakness in the semi space. So in terms of support, 550. So let's look at some options trades. Really can't get anywhere near that until you get out past earnings. With their earnings, 550, you can get a pretty decent return, $9 at 550. Again, it's an expensive stock, so you should be getting a pretty decent return there. But even with that, that's about a 2% return at $50 out of the money. So pretty good opportunity there. Even if you go to 28 days prior to the earnings, you can still get a really decent return. 28 days, $9 return, almost $1,000 return at 550, at 555. So tons of volatility. You can see the IB rank is not nearly as high as AMD, but it's definitely more volatile than Intel, which does give you more opportunity in the option selling market. Let me know down in the comments section what you thought of Intel earnings and how are they going to do going forward. Is this an omen for the sector, or is Intel kind of the weakest of the bunch and AMD and Intel are just going to pull markets higher? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.